Hi, I'm Mark King, Investment Editor at Columbia Threadneedle Investments, and here's what's in my weekly column. There's been a lot of chatter about interest rates, both in the UK and around the world. The UK base rate of interest has been at 0.25% since August 2016, but had been at 0.5% before that since March 2009. There are a number of factors that the Bank of England's Monetary Policy Committee, or MPC, have to weigh up every month when deciding whether or not to change interest rates. These include current inflation levels, other economic indicators such as GDP growth and unemployment, not to mention potential economic threats such as Brexit-related uncertainty or other geopolitical threats. Consumer debt also plays an important role. If the base rate of interest were to rise significantly and drive up the cost of mortgage repayments or monthly credit card bills, the overall economic impact could be drastic and unpredictable. Those are two adjectives that the MPC is not especially fond of. Nonetheless, there are growing signs that the UK could be edging towards its first rate hike in more than a decade. Last month, the MPC voted 5-3 in favour of maintaining rates at 0.25%, but that was the most significant split in opinion for more than 6 years, and the result of growing concern about inflation rises. There is no MPC meeting scheduled for July, so we'll have to wait until August to find out whether rising inflation in the UK has forced the committee's hand. However, we do know that the market is expecting a rise to 0.5% by February 2018, an increase to 0.75% in 2019, and a rise to 1% by the end of 2020. A rate rise could be good news for banks and savers, but it's less good news for mortgage holders, who may well see their repayments rise as a result. It's difficult, of course, to predict the reaction of equity markets to an interest rate rise, but historically, bonds have underperformed when rates rise, as it makes the fixed returns that bonds pay less attractive as rates are rising elsewhere. See you next week.